Okay, welcome back to problem PA2-2. We finished the analysis, the journal entries, and then we left off at posting or copying from the journal entries into the ledger T accounts. And this is where we left off. So the next step, once we've journalized and posted all our transactions through the course of the month, our next step at the end of the month is to do our financial statements. But before we can do that, we need to make sure that the accounting equation is still in balance. What we do is called a trial balance. And it is what it sounds like. We're going to try and see if we balance, if the total of the debits equal the total of the credits. So let's start by finishing a heading here. And by the way, this is not a financial statement. This is a tool of the accountants to check their accuracy before they do their income statement, statement of retained earnings, and balance sheet. Because if these accounts balance, if the accounts with debit balances equal the accounts with credit balances in total, then the financial statements will work out mathematically. Doesn't mean they're perfect, but they'll work out mathematically. So let's start by putting a date here. We'll do for at July 31st. And all we're going to do here is list all the account names and their balances, just the ending balance. Just a word about how to calculate a balance, because if you're doing this on paper, you won't have an Excel function here to total them for you. To find the balance of any account, we add up all the debits, including the beginning balance here. We add up the credits, and then we subtract. Total debits minus total credits, that's your balance. And the balance goes on the larger side. So in cash, the balance would go on the left side because there's more debits than credits. With accounts payable, we add up the credits, we add up the debits, there are none, we subtract, and the balance goes on the larger side, in this case, the credit side. Okay, so all we're going to do now is copy the name of the account and the balance. So cash, and then on the debit side, we'll be putting in $254,000. The next one is supplies, $37,000. Then equipment, $318,000. And notice, if the account has a debit balance in the account here, we're going to copy it into the debit column of the trial balance. Buildings, debit balance of $282,000. Land, debit balance of $200,000. Accounts payable, credit balance of $50,000. Notes payable, credit balance of $202,000. That was a long term. Common stock, $580,000 credit balance. And then finally retained earnings. And that has a credit balance of $259,000. Okay, now let's see how they work out. Perfect. The accounts with debit balances equal the accounts with credit balances. Now we know that our financial statements will work out mathematically. It doesn't mean they're perfect, because you may have chosen the wrong account to debit. Like, for example, you might have debited buildings instead of equipment, or the wrong account to credit. As long as you have one debit for every credit in our journal entries, this document will work out. And again, this is not a financial statement. This is a tool of the accountant to make sure that the totals equal. Now, what if they don't equal? Well, the first thing to do is just add again, because maybe you added them up incorrectly on your calculator. Secondly, take a look to see the normal balance. We said the normal balance of any account is the same side that you would increase the account on. So assets are on the left side of the equation. We increase on the left or debit side. So all assets should have a normal debit balance. Liabilities and equity are on the right side of the accounting equation. So we increase on the right or credit side. So they should have normal credit balances, and they do. Now that doesn't mean you can't have an abnormal balance. You can. But if you're off, that could be a reason. Another reason could be a transposition or slide. It could be that you journalized correctly, but when you posted, for example, let's go back to our T accounts, and let's say you posted a credit to cash of $82,000 and perhaps a debit to another account for $28,000. It causes the balances to be off by a multiple of 9. Or a slide would mean that you moved your decimal point over to the right or left. So for example, this credit to notes payable, perhaps you posted that correctly as $100,000, but perhaps the debit portion to cash you might have only posted for $10,000 or $1 million. That's called a slide, where you move the decimal point over. When you do that, the differences between these two columns, the difference between the columns is evenly divisible by 9. Then you know you've got a transposition or a slide. Okay, now ours does balance, so we're going to go to the next step, which is doing another balance sheet. Now this balance sheet is a classified balance sheet. Classified means it's got headings on it, classifications. They're not new accounts, they're just headings. So let's first get our date here for the balance sheet. It's at July 31st. On the left side, we're going to put our assets. On the right side, our liabilities. And then down here, our stockholders' equity. Okay, now the classifications on a balance sheet are 2 types of assets and then 2 types of liabilities. We have current assets and non-current assets. We always list current assets first. Current assets are cash, or those that will be turned into cash or used up within the course of 1 year. Non-current assets will take longer than a year to use up or to turn to cash. Same thing with liabilities, but instead of talking about using them up, we talk about paying them. Current liabilities get used up within the course of a year. Non-current liabilities will take longer than a year to pay off, like our long-term note, for example. So let's take a look at our take a look at our assets and see which ones are current. We would count current assets as cash, assets which would be turned into cash, like receivables, or used up within a year. So we only have 2 current assets here, cash and supplies. Oh dear, I ended up with the wrong account there. There we go, cash. And the amount of cash from the trial balance there is $254,000. Supplies was the other. Dear, it's not letting me. Try again. Once in a while, Connect causes trouble. And the amount of supplies from the trial balance is $37,000. Okay. Great. So our total current assets, make sure you put the heading in, otherwise it'll mark it as incorrect because you're missing something. Total current assets are $291,000. The other assets are non-current or long-term assets, and that would be equipment, buildings, and land. Now they're not going to ask us to put a heading there, although some books, accounting books, tell you to use the heading property, plant, and equipment. We're not asked to in this problem or with this textbook, so we're just going to list them as is. These are long-term assets, which means that they live for longer than a year or using them in the production of goods and services. They're an economic resource. And again, we got those amounts from up above here. Okay, let's total out our assets. Total assets are $1,091,000. Now on the right side, the liabilities and equity have to equal $1,091,000, right? So which of our liabilities here have to be paid within a year? Well, usually accounts payable. When you buy things on credit, they're usually due 1 to 2 months into the future, no longer than that. But the notes payable, those were due more than 1 year into the future. So we have one current liability and one long-term liability. So let's put them here. Accounts payable, and that's $50,000. And we don't have another one, so we'll just put total current liabilities here. And then our one long-term liability, notes payable, long-term, and total liabilities. Let's see, put the amount in there. Would be $252. And again, we got the amounts from our notes payable and accounts payable from above. Now, for equity, there's two parts to stockholders' equity, right? The original investment of the stockholders in exchange for the common stock. So they give us money, we give them stock. So common stock represents the initial investment of the stockholders, and any subsequent earnings of the company, or net income, is called retained earnings. Net income that's retained or kept in the business. We didn't give it back to investors as dividends. So we're going to write in $580,000 and $259,000. Common stock, $580, and retained earnings, $259. There we go. So our total stockholders' equity, I have to scroll down for that, is $839,000, and our total liabilities and stockholders' equity is $1,091,000. So the total assets are $1,091,000, and then if we add up the total liabilities and total stockholders' equity, also $1,091,000. Our accounting equation is in balance, and our accounting equation is the formula for the balance sheet. So we're at the end of our problem. There is, in some of your homework problems, some questions that follow the balance sheet. For example, they would ask you, who provided more of the assets, more of the financing for the assets? The creditors or the stockholders? Well, let's see. The creditors provided $252,000 worth of financing, and the stockholders, between their original investment and successful operations, $839,000. So in this case, the stockholders would have provided more financing for the assets. Another way they can ask you that is, how much of the assets, total assets, do the creditors own? Well, the creditors have a claim to $252,000 worth of the assets because they expect to be paid. And the owners have a claim for $839,000 of the assets. Okay, so we're done with problem PA2-2. Feel free to try the practice problem, or you can go on to the homework problems, and a very similar problem has been assigned to you. Remember, you can use the hints. You can use the check my work 3 times for each problem, and you can submit your homework problems in total up to 3 times. Take care. Have a good day.